right, welcome to Talk Investing. I'm Tom, and as always, this is not financial advice. Today, I want to talk about Marathon Digital Holding. They are, of course, a Bitcoin mining company. They are, in fact, the largest Bitcoin mining company that is publicly traded. They put out their monthly operational report this morning, so I wanted to go through that. There's some staggering numbers in there, so I want to go through that report. They put out some other information over the course of the last month as well. We're going to talk about the production numbers for this month, which were record-breaking, as well as their overall business. So there's a lot to go through, and then we're going to take a look at the chart, of course. So if you're new to the channel, we talk about Bitcoin and Bitcoin miners all the time on this channel. If that's content that you're interested in, please remember to subscribe to the channel. Also, if everybody could smash the like button, we're going for 500 likes on this video. This should be an exciting one, so everybody, let's get ready and let's talk about Marathon Digital. All right, Marathon Digital closed at around $23.43 yesterday. That leaves them just over a $5 billion market cap. In 2023, Marathon grew substantially. All the Bitcoin miners had spectacular years. However, over the last 4 days, there's been a pullback. We'll take a look at the charts later. I'm less concerned about that. I want to talk about what Marathon just did in the month of December. So let's get straight to their monthly operational report. Okay, Marathon Digital Holding announces Bitcoin production and mining operations update for December 2023. So I'm going to read a few of the highlights at the top here. Record Bitcoin production, 1,853 Bitcoin in December. And that leaves them with 12,852 Bitcoin for the year. I want to focus on that 1,853 Bitcoin and put that in perspective. That was a staggering number. I had talked about the fact that I thought most of the large Bitcoin miners were going to have their best month of the year in December. A lot of that had to do with the massive increase in fees that were charged that the Bitcoin miners collect every time they mine a block. And Marathon specifically lets us know how much of this was fees. But the other thing was, Marathon, in addition to collecting a massive amount of fees, they just mined more blocks by far than they've ever mined. I want to go to a chart that shows you how much they mine by month and just show you how much they beat their previous months by. Okay, so this is Marathon Digital by month, going all the way back to July of 2022. In July of 2022, they were having to shut down their old operations, move to their new operations. Things weren't going as planned. They got all the way down to, in the month of July, they mined 72 Bitcoin. Again, this was a year and a half ago. So they did have a very rough period. But obviously, you can see by the middle of 2023, they were really putting up some good numbers. But this number here is off the charts. 1,853 is by far their all-time record. It's over 600 Bitcoin more than the second best month this company has ever had. So that's the first thing I wanted to show to try to put this in perspective. The next chart I want to show you is last month's Bitcoin mined for each of the Bitcoin miners. So this was the month of November. And what I wanted to show you is Marathon at 1,187 was in first place by a mile. So that was November. So this month, they absolutely destroyed that number. So this production of 1,853 Bitcoin, that represented a 56% increase month over month for Marathon in production. I don't think a Bitcoin miner has done that all year. I certainly was not expecting that. The difficulty level went up again in the month of December. However, in the month of December, we did have an unusual situation where the Bitcoin mining fees collected were substantially larger than average, on the magnitude of more than 10x the normal amount of fees. So that led me to believe that most of these companies were going to beat their previous months, but to beat it by 56%, far and away exceeds any of the other monthly operational reports that we've seen so far. This is a Grand Slam home run month for Marathon, but I don't think they'll be able to duplicate these results again in the year 2024. And remember, we only have a few months left. The halving will occur in April, so, from the middle of April forward, the reward is going to get cut in half. So obviously, from that point forward, they're really not going to be able to mine these types of numbers. But even in January, February, March, I'm very skeptical they'll be able to duplicate these results. This is such an outlying event to the upside. Now, having said that, they reap the benefits of that, and we're going to go through some of that. This dramatically increases their hodl position. It dramatically increases their liquidity, strength of balance sheet. So even just this 1 month, and I am expecting good months. So I do think their momentum will continue and they will have an excellent January, February, and March. I just don't think they're going to be able to come close to these numbers. This was really a special month for Marathon. Okay, so you can see the next line, it says they increased their average operational hash rate by 18%. So this goes really to what I was talking about. An 18% increase in their operational hash rate should have been offset by an increase in the difficulty level to a certain extent, but they had a 56% increase increase in production. So again, this was just an outstanding result for them. Bitcoin holdings now over 15,000. So they hold the most Bitcoin on their balance sheet of any Bitcoin miner by far, and they continue to add to that. They added over 1,000 Bitcoin to their balance sheet just this month. So total cash and Bitcoin, so their total liquidity is now over $1 billion. So going into the halving, this is an incredibly strong company. We did interview Fred about a month and a half ago, and one of the things he talked about is they were looking to improve their liquidity and go into the halving as strong as possible because they felt there would be some real opportunities for inorganic growth at that time as other Bitcoin miners may struggle through the halving and beyond. They were looking to shore up their balance sheet and potentially look for opportunities around that. So we'll see how that plays out. The price of Bitcoin is actually doing a little bit better than I think Fred expected. They were a little bit bearish on the price of Bitcoin going into the halving, and obviously at the moment, the price of Bitcoin has been doing very well. 2023 was a spectacular year for Bitcoin. Okay, a couple of key highlights here. Management's commentary. So I highlighted here, we continue to target 30% growth in energized hash rate in 2024. So they do have plans to continue to grow. I actually think when it's all said and done with, they're probably going to exceed this expectation. So Marathon's a company that over time has had trouble matching their expectations. They've been a little slow to get where they're going. Having said that, they are now there pretty much by any metric that you use. Marathon is the largest Bitcoin mining company, and for most of them, it's not even close. They mine the most Bitcoin of any publicly traded company by far. They have the highest exahash rate of any Bitcoin mining company by far. They have the most hodl position of any Bitcoin mining company by far. Their liquidity is better than any Bitcoin mining company. So all around, obviously, things are going very well for Marathon. And like I said, I've done several monthly updates on them, and there were times when the picture was not as clear as it is today. But I have to give them credit. I think this is an A+ monthly operational report. I was critical of them when they were struggling. So to be fair, I think it's important to call out this is just an A+. Okay, they then say, and with the recently announced acquisition of 2 sites from Generate Capital, which is expected to close in January of 2024, we expect to reach 50 exahash in the next 18 to 24 months. So that's a little bit of a generic statement. They don't give any specific plans on how they plan to get from their current about 24 exahash to basically doubling that to 50 exahash in the next year and a half to 2 years. So details to follow, I guess. A lot of companies are doing this. They're giving some generic, very high expectations as to where they expect to be, by the end of 2025. So here we have Marathon talking about 50 exahash. I do actually think this is realistic. That would be a double. So I do think potentially by the end of 2025, depending on the price of Bitcoin, I think they are set up to do this. So I'm just going to get to this thing that they mentioned briefly here, the recent acquisition. Marathon Digital Holding enters definitive agreement to acquire multiple Bitcoin mining sites for $179 million. And I just want to get right to the heart of what this means and why they did this. And it really goes to this sentence right here. They say Marathon's Bitcoin mining portfolio consists of 584 megawatts of capacity, 3% of which resides on sites that were owned and or operated by the company, and 97% of which is hosted by third parties. If you remember, this is a company, their tag phrase was asset light. Their goal was to maximize the number of Bitcoin mining machines and exahash that they had and leave the infrastructure to others. This represents a fundamental shift. Fred has come out and said so. They are moving away from asset light. Right now, 3% of their machines are self-hosted. They're looking to massively change those numbers. So this one purchase ultimately, and this is going to take time, this one purchase is going to dramatically affect that. So once this is fully implemented, and I do think this is going to take a couple of years to be fully implemented, and one of the reasons is a lot of the facilities they took over are currently housed with other Bitcoin miners, so they will be hosting those machines until they can end those contracts and segue into their own machines. However, a bunch of this capacity is available immediately. So let me read this sentence. Marathon's Bitcoin mining portfolio will consist of approximately 910 megawatts of capacity, 45% of which will reside on the sites directly owned by the company. 3% of their machines are self-hosted. They're looking to get that up to 45%. So this is a part of a shift in philosophy. I think they will continue to make moves like this. They're probably going to try to get as close to 100% over the next 2-year period, or at least a vast majority being self-hosted versus being hosted by others and paying that fee. They talk about in their most recent presentation, this is going to add 400 basis points to their gross profit margin, essentially, which means they're probably, it sounds like, paying 4% fee for hosting. So they're looking to eliminate that fee, decrease their cost per coin, and increase their profitability. Okay, then they say, quote, hash rate growth and continued efficiency gains helped grow average operational hash rate by 18% to 21.9 exahash or 22.4 exahash, including our share of joint ventures. So they do have a few joint ventures around the world outside of the United States. They are going to start reporting these numbers on a consolidated basis. In the past, the numbers they reported were just their U.S. operations. From December forward, it's going to include all of their operations, and I do think that makes more sense. Okay, they say this helped drive record Bitcoin production as Marathon mined 1,853 Bitcoin in December, up 56% from November and 290% year over year. So again, you're going to see 18% increase in capacity, yet a 56% increase in production. So outstanding results. Then they go on to say significantly higher transaction fees helped Bitcoin mining production grow much faster than average operational hash rate. For the month, Marathon Pool collected more than 380 Bitcoin in transaction fees, or 22% of Bitcoin production. So this is a big part of why they increased, but this is not the total answer. So obviously 380 Bitcoin, that is significantly more than they have done in the past. Even last month in November, which was a good month for transaction fees, you can see I'm looking at November's report, their transaction fees were 135 Bitcoin. That went from 135 Bitcoin, which was one of their best months ever, to 380 Bitcoin in transaction fees. If you take a look at the number of blocks won, in December, it was 222. In November, it was 159. So that is a 40% increase in the number of blocks they mined. Remember, they only had an 18% increase in their exahash rate. So this is why I think it's going to be very difficult for them to match these numbers. Everything went their way for them in the month of December. Some months will be better than others, but you can see this was one of those months. 40% month-over-month growth in the number of blocks rewarded. That greatly outpaced the increase in their exahash rate. So a massive amount of fees, 380 Bitcoin mined by fees, 40% increase in the number of blocks rewarded. That's why I think December, this number, 1,853, I do think this will be the most Bitcoin they mine, really probably for the next 2 years, because the halving's in April of this year. So with the effect of the halving, this is probably the peak for them. Now, they will have months that have much more revenue than this, because provided the price of Bitcoin continues to increase, their overall financial equation can get much better than this. I just think from a numbers standpoint, this is going to be the best month they ever had, and that's probably going to hold true for quite some time. Just to put things in perspective, share of available mining rewards, they mined 5.1% of all the blocks mined in the month of December. So that is the best performance ever by a publicly traded Bitcoin mining company by far. They have really solidified themselves as the largest Bitcoin miner in this space. If I go back to this press release on December 19th, where they talk about acquiring these additional sites for $179 million, there's another sentence that they kind of just slipped in there that I want to read because I do think it's important. Okay, if you go way down, this is in the 4th or 5th paragraph down, they say Marathon currently has 7 exahash of miners on order, the first tranche of which is set to be delivered and installed in January of 2024. So they will continue to increase their exahash, including January of 2024. They talked about increasing their overall exahash for the year by 30%. Well, this 7 exahash rate here represents about 30% increase. So even if they do nothing else, it looks like they're going to reach that goal. I think they will do things other than this. The last comment I'll make about this 7 exahash is I'm calling this the mystery 7 exahash. I cannot find any press release. I cannot find any information at all as to what these machines are, when they made this purchase order, and who they're getting them from. So I think there's a reason for that, and I'll show you what it is. This is an article back from May of 2023. Bitcoin miner Marathon Digital linked startup Auradine raises $81 million. So this is a Bitcoin mining manufacturer, an ASIC miner manufacturer. And you'll see here, Marathon Digital CEO Fred Thiel sits on the Auradine board of directors. So this is total speculation on my part. They have not said this. And in fact, when I asked Fred in my interview a couple of months ago, he really couldn't talk about whether or not they're buying any machines from Ordyne or not. But the fact that they just casually say they have 7 exahash of miners ordered, there was no separate press release regarding to this. They don't give any details on who they ordered them from. I'm wondering if this is the beginning of their orders from Ordyne, and if this is going to be a big part of where they get machines from in the future. What Fred was willing to talk about is this company's machines are specifically tailored to match up with Marathon's software. So again, this is total speculation. I don't know that this is the case, but at some point sooner than later, since these machines are going to be delivered in January, I would think they're going to have to disclose exactly what's gone on here. So we'll wait for that information. Just to reiterate, I do think there's a couple of gigantically important takeaways. Number one, they say right here, total cash and Bitcoin equivalents, $1 billion. So they have $1 billion of liquidity on their balance sheet. That should improve. And just to show you how good December was, if I go to the November operational update, which was just last month, their liquidity was $800 million. So they added $200 million to the liquidity in their company. Now, there's two pieces to that puzzle. Number one, they have 15,000 Bitcoin on their balance sheet. Bitcoin went up in price, so obviously that's worth a lot more money. But number two, with this number of Bitcoin mined and with these additional Bitcoin fees, Marathon was hugely cash flow positive in the month of December. By my calculations, and I'm being conservative, I would guess they were at least $30 million cash flow positive, if not more. Now, they chose to take a lot of that and increase their HODL position in Bitcoin, so, that's more cash and cash equivalents. But a $200 billion increase in their liquidity is a gigantic step in the right direction. I would expect that to continue to grow going into the halving. Lastly, we'll just take a really quick look at their chart. If we go from October of 2023 to their peak, which was the end of December, so this was a little bit less than a 90-day period, Marathon's stock was up 331%. Now, this was not an outlier. The Bitcoin mining companies all had very good runs in this period of time, so this was one of the better ones. This was consistent with what the industry did. More importantly, in a 4-day window, they pulled back about 24%. In fact, if you were able to buy them in pre-market on Wednesday, they were down closer to 35% in a 4-day period. So they did have a nice recovery yesterday. We'll see what happens today. But essentially, this stock went from 31 down to around 20 or 21 in a 4-day period. It is back on the rise. It's trading at around $23 as I'm making this video. That's pretty much everything that I got for you. That's what's going on with Marathon in the month of December. That's what's going on with Marathon overall. Please feel free to drop in the comments if you have any other thoughts or questions on what Marathon did, and or if you're looking for any other Bitcoin mining deep dives, let me know in the comments. Drop in the comments section who you would like to see me do a deep dive on next. And of course, if you made it this far, thanks so much for watching, and please remember to smash the like button, and if you have not yet subscribed, please consider subscribing to the channel. So thanks again, and we will see you in the next video.